Good morning, everyone. Welcome to the PivotBoss pre-market video for Monday, January 14th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here that we've had quite a move higher here in recent trading. Ever since the turnaround right after the Christmas holiday there, you see a solid rebound off of support around 24.50, really as low as 38.5 here. But that was the level we mentioned that if price can come back and hold it, we might see another push higher into this FOMC key level and perhaps see a little bit of overspill into 2600. And again, that's basically right where we hit. The high last week was 25.99.5. And so basically the key levels that have needed to hold have held. If you take a look at the wider view, you'll also notice from the impulse sell-off earlier in the year, right here, those lows, those were those highs which have been broken back above. That's the 25.29s. And I mentioned before, even if we drop back as low as that level, that could still be an opportunity for bulls to defend for a shot at pushing this thing higher still, perhaps into 27.0375. If you take a look at the recent support lows here, right here across these lows, that's basically 26.16s. 2600 is also kind of that key level as well, but really right in that zone, 2600 to 2615 or so, that's the level that the market really needs to get through. We may pull back here early in the day, but if price starts to fail to hold below the previous session's low, Friday's low, we could see a nice continuation higher. And if price can transition above that zone, that's when you have the opposite side of the range, the prior price distribution that is in play. So again, theoretically speaking, we can be rallying all the way back to 2800, 2820 if price can hold above 2600 to 2620 basically. The next 200 points are up if it can jump over this hurdle. A failure here can open up a pullback as deep as recent lows. So it can be a little pullback, a medium, or even bigger. We don't know, but it has this entire price distribution here to trade off of if it cannot get back into this one. So I wanted to provide a little bit longer term direction there and framework for what I'm looking at. But right now in the near term, keep an eye on the previous session's low right there. Failure to hold or get back above that level opens up more downside at 25.29. Getting back above that level would suggest a rejection, a failed new low, and that would open up a trend up type of day in the near term. Taking a look now at the NQ. On a swing basis, the NQ looks very similar to the ES. You can tell certainly the bounce has been very strong. The pullback into 61.50 held, and then it pushed back above 6,400, 65, and now 6,600. We're currently pulling back off the 66.45 high, but still trying to hold these recent lows right here. Is this market in an uptrend? Again, this one can pull back as deep as say 64s and still be a great swing opportunity to buy it and return it higher. For this one, again, if it can reclaim prices above 6,600 or continue to hold 6,500 even, it opens up the potential to see a move across the range into 7,200. In the short term, just for today, keep an eye on the previous session's low. We are well below that low right now, but if we start to climb back above that zone, it would suggest more strength over the next few days. Failure to get back above that zone opens up more of a pullback again between 6,400 and 6,415. Alright, let's take a look now at crude oil. Here's a look at crude. This one looks very similar to the market as well. We've gotten a turnaround that has been the same duration. Day before Christmas, day after Christmas here, a hold and a continuation higher. Right now we're seeing the biggest two-day pullback we've seen since this uptrend took place. So that's a pretty significant pullback here for this move, but it's still nothing compared to what we've seen in terms of selling pressure before. OPEC meeting is later on this week. That could be significant. Again, the current cuts that take effect beginning in January here may begin to continue to push this thing higher. So overall, $50 here, very important. 49, very important. we could drop as deep as that zone and still be a great buy for a continuation into 55s. So this could be an easy test back to 55 on the next pullback. Again, we're watching the previous session's low. Holding above that 5130 zone would suggest the next 2 to 3 days could be up into 55s. Lastly, taking a look at gold. You'll notice gold here has gotten trapped, stuck in the mud, and that tends to happen around VPOC. This is composite volume point of control 1287.60. It's marked CHVN because it was prior VPOC was 27.75, and then it shifted up. Actually, it was prior here, shifted down, then shifted back up, and again, once price takes its time to get all the way back to value, at times it can get stuck in the mud and just chop around that area. I mentioned that we still have an upward bias, but it wouldn't surprise me if we take out this low, then chop and take out the high, and chop and chop and chop, or vice versa, as this thing continues to go sideways with a wide pivot range for the month after a solid 2.5 month rally and back to value for the first time in months. This could suggest more sideways before the overall uptrend continues. Now, from a higher time frame perspective, really quickly, as long as price can continue to hold the 1240 level, this is poised for 1360. And any pullback into, say, 1255 could be enough to be a great medium term or position buying opportunity for a continuation toward 1360. Alright, that is it for now. We'll see how this plays out heading into the rest of the session. One quick update: if you are in the Dallas, Texas area on Tuesday, tomorrow, which is January 15th, 2019, I will be speaking for the Association for Technical Analysis, AFTA, later on that evening, and I'd love to see you there. Please check the Twitter feed for more information on that if you're interested. Alright, we'll see you in the trading room. Take care and trade well.